Welcome to Richard Suttmeier's 4 and 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip is an overview for this week, and the risk reward is not positive. U.S. Treasury yields are on the rise despite rate cuts by the Federal Reserve. In addition, Fannie Mae spreads are wider, so despite 125 basis points of rate cuts in January, mortgage rates are higher. Gold and crude oil reached new all-time highs last week. The Fed rate cuts were supposed to help consumers and homeowners, but instead they helped commodity speculators at the expense of consumers. The dollar is in between a tug-of-war as the euro tries to rally towards resistance and the British pound stays above support. The trading ranges persist for the major averages, but the downside risks far exceed the upside potential. I show a daily chart for the yield of the 30-year bond, which is cheaper than its 50-day simple moving average at 4.442, which indicates risk to higher yields with the 200-day at 4.770. My second blip analyzes the daily charts for COMEX gold and NYMEX crude oil. For gold, monthly and quarterly supports are 897.5 and 856.5, with weekly resistance at 980.7. For NYMEX crude oil, weekly and quarterly supports are 92.02 and 88.85, with my semi-annual pivot at 99.83. My third blip looks at the daily charts for the euro and British pound. For the euro, I show semi-annual and annual supports at 1.4361 and 1.4174, with weekly and daily pivots at 1.4710 and 1.4833, and quarterly and monthly resistances at 1.5066 and 1.5104. For the British pound, I show weekly and annual supports at 1.9316 and 1.9217, with a daily pivot at 1.9664, and semi-annual and monthly resistances at 2.0029 and 2.0643. My fourth blip shows the unfavorable risk-reward for the major equity averages. For the Dow Industrial Average, I show weekly supports at 11,601 and 11,467, with annual resistance at 12,670, and annual support lags at 10,747. For the Dow Transports, I show weekly, monthly, and annual supports at 44.16, 43.71, and 42.67, with the 200-day simple moving average at 48.52. According to Dow theory, daily closes below the January closing lows of 11,971.19 on the Dow Industrials and 4,140.29 on Dow Transports signals the next leg to the bear market. For the NASDAQ, weekly charts show the 200-week simple moving average at 22.54 as support, with the 5-week modified moving average at 24.02 as resistance. A weekly close below 22.54 warns that the bear is coming out of hibernation. Send your comments and questions to support@rightsideadvisors.com. That's today's 4 and 4. Enjoy your day.